Good morning, everyone. Sam here. Let's get started. Great to see everyone, and it has been great spending a week with you. Hopefully, it's been an impactful week. We try to cram supply and demand, knowledge, and application all into 5 very quick days. And but if you still have questions or not sure, that's okay too. Nobody gets this overnight. I saw a couple questions in the chat about these sessions going on next week. So these specific sessions, the early morning trading and analysis sessions, will not go on next week. Those will be inside those transition to the new venture next week. We just had a week in between here, so we thought we'd just share information and all this with you. However, we do plan on holding some sessions next week, midday or afternoon. We'll figure it out and get those messages out to you. And in those sessions, what we thought we would do is take a deeper dive into, kind of more of what we do and how we do it. You know how we did this week with the whole concept of where will price turn, where will it go, the logic and rules behind that, right? So we'll take a little bit of a deeper dive into that next week, and we'll message those sessions out to you on social media. Does that make sense? All right. Yeah. And we haven't talked about the new venture much this week in here. In fact, I don't know if we talked about it at all, because that's really not what these sessions were for. We just wanted to, again, we had a week where we could make this happen, so we just wanted to make it happen for you. Okay? Here's our thought of the day. Growth can be painful, change can seem scary, but nothing is as bad as staying stuck somewhere you don't belong or want to be. Right? If you're not happy with where you're at in anything in life, imagine being in that same spot next year. This time. We'll have to check in on that. Never forget, to become a butterfly, you must want to fly so bad that you're willing to give up being a caterpillar. And there they are. I'm still not sure what they're drinking, though. The butterfly looks like the butterfly has maybe a glass of, I don't know, wine or something. But what a conversation. You've changed. We're supposed to. It's okay, and we are, and we do, and we always will. Embrace it. All right, let's move forward. So we're going to review the Russell in just a few minutes, and I'll move a lot quicker today than I did the last few days. I wanted to kind of go slow because it's just so important that you understand the logic behind everything we're doing, because if you don't understand the logic, then it's going to be nearly impossible to understand and follow the rules, no matter how simple they are. So one more kind of review of that, and let's, again, like we've been doing this week, use some examples from our live sessions, right? So just a couple days ago, we identified this supply zone in the Russell, okay? We had the structure was there, and the location was there, right? And of course, nice, big, strong move away from that area, suggesting a big supply-demand imbalance at the level. Okay. Notice all of this trading activity that then took place after that. Okay. This suggests the more of trading activity in here, the less potential trading activity in here, meaning that supply, the likelihood of a significant supply and demand imbalance there is not likely. Okay. So looking over to the right, just yesterday we finally rallied up to that level and fell. And notice how quickly prices fell from that level once they rallied up to that level. Why did that happen? Because not only is this giant area a form of the white space or that middle, right? Remember our supply and demand lessons earlier in the week? But we had another pocket of that up here. Okay. So price fell quick. Price turned sharply here because we identified an area a couple days before that where banks and financial institutions were selling. And the orders were too big. That's why you got very little trading here and price fell away, right? Right here, the last buyer bought. Supply still, there was plenty of supply here. That's what happened, right? When price comes back, novice traders and investors buying, banks and financial institutions selling. We know who's going to win that equation or battle almost every time. And price falls quickly because there was nothing to stop it. And that's what this area represents. Remember, the presence of filled orders strongly suggests the lack of unfilled orders. In this case, we're talking about demand to stop price from falling. Make sense? Okay. And last but not least, well, I think that's anybody take this trade, by the way? Anybody take this trade in the Russell? Maybe in the futures, maybe IWM, the ETF, maybe some small cap stocks. Not sure. All right. And we're going to look and move forward. Again, just wanted to use some of our some of the levels here that we've gone over in the sessions to help you understand, you know, because you're kind of living those levels, right? All right. Well done. Limit orders, yes. You don't, from my experience being on the trading floor, big money decisions are not made with, you know, quick, they're not quick decisions. They're not typically market orders. They may be a form of a, when they go into the market, right? Obviously everything that, you know, gets executed is a, you know, ends up being an order that's executed at the market price, right? So maybe those orders aren't sitting on someone's desk for everybody to see. Most of the time they're not, but certainly it's a well thought out plan as to where the smart money buys and sells. And our job is to identify those footprints on the chart, and that's what we're doing here. And not just identifying where they are, but also where they're not. All right, well done if you took that trade. Good job. Let's move forward. On to today. So we've got a chart of the NASDAQ on the left, a chart of the 10-year note on the right. And you can see what we put up here. Our current market focus. So yesterday, if you remember, I was talking about, and Jasmine talked about this too, bonds were somewhere down here. I forgot exactly where they were. But we said, look, a bond rally up to supply is likely to help equity index markets decline. Okay, so the NASDAQ hit our supply zone that we've been going over all week and fell about 250 points. Anybody take that trade, by the way? My guess is many more people trade the NASDAQ than the Russell. And so that's that, you know, again, that not only did we have the structure and location of that level right in the NASDAQ, but we had some help with the bonds having room to rally up to supply, right? Okay. All right. So, and then price now coming into today, which is most important, right? Price is up into and turning from this supply zone in the bonds that we've been going over and falling. That's what's helping equity index markets rally, right? Got some little demand zones down there, but certainly the bond supply zone and bonds falling from supply are helping equity index markets rally this morning, right? Okay. Hey, Baga, I did see your question in the chat there. I'm not looking at the chat too much, trying to just focus on what we're going over here. But I did see your question there, and so yeah, I've always been focused on fresh quality levels, and you have a lot of. I see what you put in there. I think partly because there's so many people now talking about supply and demand and all that you know, it gets confusing, right? Some people talk about this level or that level. I've never changed from the original strategy I developed over 20 years ago, and that's what we're sharing with you here. Those pivots or rally-based drops or drop-based rallies, I think that you're mentioning in your question there, the good thing about those is they force you to get out to the extremes to at least look for the fresh levels. Does that make sense? Okay, so those would not be fresh quality levels in and of themselves. I've tried to be messaging that quite a bit, but those help force people out of the middle, out to the extremes, where we can then look for those levels, and we can try to explain more of that, if we have some more sessions. But just want to make sure and address that. All right, so going into today, again, we're going to watch this level. We've got some other levels to go over with you. But you can see, I want to just kind of point out, like, it's been a little going into this week, and I remember Monday and Tuesday, speaking with Jasmine before, as we're prepping for, our trading and the sessions and all that. Okay. I remember early in the week, it's like, ooh, this price is not in a great spot. We should probably not do much. But it's no fun telling people to just, hey, we should probably sit and wait. But hopefully now, towards the end of the week, you can see why the right thing to do is kind of wait for prices to go up to the supply zones. And, be careful buying and selling too much before that, because the odds are not stacked in your favor, right? Remember, price spends the vast majority of its time in between your key supply and demand zones. And where we find and want to take low risk, high reward, and high probability action is out at those extremes, but that's only a small percentage of the time. Does that make sense to everybody? Okay. Now we can bring this whole concept down to tiny time frames, and you'll get plenty of activity. We can bring this concept to the middle kind of swing trading time frames, which is what we've been focused on a lot here this week. And you see the activity you get. And of course, we certainly apply it to the larger time frames. And I think you saw that when we went over the stock portfolio, right? Does that make sense? Okay. And then, but again, like we say most weeks, the NASDAQ, for example, all right. Well, we'll talk about that another time. But anyway, well done if you took that NASDAQ, and hopefully you're keeping an eye on this bond level too, because that could help you identify potentially, where the equity index markets are likely to turn higher, which they did, and which helps with profit targets. Does that make sense? Okay, let's move on. Let's go to live charts here, if I can find them. There we go. All right. So even though we're getting a big rally, let's take a look. And the S&P did not make it up to that big 60-minute supply zone. So we'll go pretty quick with the S&P. And look, if you're looking at the let's just look at the daily chart for a minute of the S&P. Okay. Here's the week, right? Here's the whole week. You're looking at it. Did prices really move this week? Right? Did prices really is that, you follow me? Did prices really move this week? No. They were kind of stuck in the middle the majority of the week. However, if you had the discipline and patience to wait for that Russell supply, to wait for that NASDAQ supply, you probably did fine. If you played around too much in the middle, it's very easy to lose money. Okay. All right. Okay, excellent. So well done there. Having said that, let's quickly review some of the levels that we've gone over. On the supply side, I know I seem like a broken record here, but there's those levels. And again, remember, even though we may have talked about 30.02 the other day, the meat of the level really starts around 30.09, 30.10. Okay, could it turn before that? It could. But the meat of the level, if you're wondering where that is much closer to 30.10. All right. So that's the supply side for the S&P. On the demand side, well, that 15-minute level is much lower. Let me go to the 60-minute here. Oh, we just did that. Sorry. The 4 hour. Yeah. So this is the challenge with quality demand zones. Now, really try and focus here. Okay. So yeah, I'm showing you a quality demand zone at 2,600, and you're probably thinking that's great, but we're at 2,900. So there's nothing for 300 points. There's small time frame demand zones in here. We've gone over some of them this week, but if you look inside here, the low, what is the probability? Okay. In other words, let me be more specific. When we find small time frame demand zones in here, are they likely to have a big supply demand imbalance in them? That's the ultimate question, right? That's the ultimate question. Are they likely to have a huge supply demand imbalance in them inside, this area here? Okay. My answer is if there was a big supply demand imbalance somewhere in here, why was price able to trade below that area for so long and so often? That's the point, right? That's the point. Okay. Does that make sense? So sure, there's smaller time frame demand zones in here. Some of them will work fine, but it all depends on, again, that menu that we went over yesterday. Right? Do you want very high probability? Are you okay with lower probability? And they're all fine. It's just you have to decide, what you want, and then lock into that and execute like a robot. Okay. And so there's that demand in the S&P there. Let's move on to the NASDAQ. Okay. So here's that NASDAQ level again. Again, if anybody took that from up here, we now have an area here that we can look at, right? So, and look at how, again, if you look at 100% of the time this week that the NASDAQ or the equity index markets were kind of trading somewhat in the middle or before the supply zones. You remember I said in the beginning of the week, it's like price spends like 2% of its time out at those extremes, and that's it. This is like musical chairs. That's what it is. Now, it doesn't mean you have to wait a week for an entry. Now, if you waited the week for this entry and you took it, fantastic. That's that's all you need to do for the week. But it doesn't mean you just have to sit and wait for that. You can do this, everything we're doing here, you can do on smaller time frames also if you want more activity, or you can do on larger time frames too if you want less activity. It's all the same rules, one strategy, any market, and so on. So let's look at this area over here on the 4-hour chart. Now, again, knowing that the NASDAQ turned at our at the 9,500 supply zone above, we now have a new level sitting right here. Okay, it's nothing fantastic. It's below. In fact, it should be that different color. I forgot what the color is. But anyway, this is inside of this. So again, let me show you here just so you understand. This area, this new 4-hour type area, is below this higher probability 9,500 area. Does that make sense? So on the supply side, that's what we're looking at in the NASDAQ. The higher probability area would be another move up into the 9,500 supply. And then, of course, when it comes to the demand side of the equation, again, those levels the quality levels are lower because we need to be careful looking inside this, at least in these bigger time frames. Now, again, the NASDAQ coming down to this 9,200, close to this 9,200 stuff. It didn't get there. And the bonds into supply. Jasmine's going to go over that in a few minutes. Obviously, that created a pretty big bounce, about a 100-point bounce in the NASDAQ this morning. But that's only brought it about maybe halfway back to our supply zone up there. Okay. So again, this new level is inside of the supply, supply zone that it's below the supply zone that we went over yesterday. And let's move on. Here's the Russell. So let's go to the 4-hour chart real quick. Fresh levels going into, and this is more for next week. I highly doubt that the Russell's going to get to any of these levels today, but just so you have this for next week, 1430 on the upside for supply is where you have the beginning, the start of a couple levels up there, and then 1127 on the downside is where the larger time frame demand zones start there. So, it's important to have this larger time frame context if you're going to do some short-term trading or what have you. Okay. Having said that, let's move to the 60-minute chart. We don't have to scrunch things up that much. There's that supply zone. So I think from our sessions this week, and again, notice all of the trading activity right here. Okay. So prices fell quickly from that level, but notice how fast they're moving back up. Why? Because there's no big pockets of unfilled orders, supply or demand inside this white space, this range. All right. I know I keep kind of repeating the same concept, but it's just so important that you get the right mindset first. All right. Okay. Sitting below current price, we have these are actually two overnight demand zones sitting on top of each other. So make sure you understand, two overnight demand zones sitting on top of each other. We're looking at a 5-minute chart here. These begin at 1330, go all the way down to 1326. Remember, your stop, your protective sell stop for the risk is always just below the level. And hopefully, I've said enough this week, and I try to always say it. Whatever you're trading, stocks, futures, Forex, options, bonds, you name it, day trading, swing trading, longer-term position trading, whatever. One of the most important things to do is make sure you understand your risk and then make sure that you're okay with that risk. All right? And, where to place your protective sell stop, for example, in this case, which would be below the level, is one thing. The actual risk that you have on the trade is your position size, right, with the distance from entry to stop. So make sure that you know that ultimate number and that you're okay with it. It's probably the biggest reason why most people don't follow and can't follow their rules. It's because they're actually not comfortable with the risk they're taking on. The micros, I'm sure most of you know about the micros if you trade futures, or if you're trading spot FX, right? You can trade smaller size and all that. And anyway, if that will help solve the problem. All right. So with that, let me go over to the Nikkei also. So I think Jasmine went over this one yesterday. I'll mention it here real quick because I'm not sure if she's going to cover it, but Jasmine, feel free to.
All right, looks good. Awesome. All right, let's get moving. So as Sam brought up about the Nikkei, we talked about it yesterday. We mentioned about how, it was the first market to show a little bit of sign coming into that initial move of the virus, and then with some issues going on overall in general with China and all, and then today with Hong Kong. But the difference is with this is it just created a pullback for buying opportunity in some of the people didn't get in on some of these markets. So as you can see with the DAX, it came all the way down to our 5-minute zones. We had two on top of each other. These two on top of each other inside the DAX. And a very nice rally out from that point. So we should be able to attempt to touch the top again, and you can see the next significant area is going to be the gap above with the level above that too as well. And then you do have some smaller time frame, but the next significant demand is the 10763, 10722. All right, let's move into the bonds. Okay, so this is the scenario we had with the bonds. Yesterday, didn't quite get back up there into supply, but this morning it did. And you can see once it did, we did have that nice little rally. It's got some close demand, as you can see, so we're still holding above it now. It's still very, very much inside of a range, hitting the top of the range, but very much inside of the range. And you can see that these, you know, they can offer some sort of trades. That's why they are different, the brown color. But a lot of times, because they're in the middle, they can, you know, they either have a close target area and things. So that's why you got to watch out for those that are a little bit more in the brown than on the outside of the, especially in a market like this where it's been through. Not only is it in the middle of range, but it's also been there many times. So you can see right here, it's been through it many times. So in terms of that, you can see on here that we really still have some level of demand right in the middle too as well, the 138.30 to 138.28. For the 30-year, so the 30-year, the middle levels only offered, you can see every time it came up to middle level, it had some demand. So what it did was it went all the way back to the retested level that we had from this initial drop. And that's where it went all the way back to. So again, 30-year showing that weakness and then equity starting to rally. But now we're sitting right in between. Now you can see the difference coming into this U.S. session is that we have actually came up a little bit inside of the bonds, but we really haven't dropped inside of equity. So that's still showing we're losing a little bit of correlation inside of that. You can see the next supply zone, of course, we been below here for quite some time, so it is struggling to get back up here on the 30-year. So 30-year is weaker than the others. On the we do have some gaps below, and you can see you got two gaps coming below, coming in at the 179.13 to 179.7 and the 179.3 to 178.27. Okay. We'll go through one more bond today, which is going to be the 5-year. So like I said, the 30-year has been the one that's weaker than the other two. And you can see even with the 5-year here, the strongest of them all. So the lower term rates are the strongest of them all. They made a new high. Since then, we have been pretty much staying above that area. And now we're testing back up to the highs again. So you can just see the overall look of this market too as well. And I put the square there just to show you how since we've gotten to that point. So no real weakness in the market, but you know, you can just see it just stalling out inside of here. No supplies, I would say, in this market, but there is a retested demand down at 124.30 to 124.26, and then a fresh demand coming in at 124.06 to 124.01. On the 30-minute, it also has a middle of the road type of demand that's coming in at the 125.17 to 125.16. I thought another market that was interesting to me, actually, that kind of give a little bit of the picture, was this, the VIX. So if you remember the VIX, that usually shows you a lot of times when you do have that massive sell off. The VIX is usually the one that moves, and you can see that ever since that the time with the virus and the VIX started to pick up some volatility here, and we still have this open gap down below. That's still going to be demand at 1837 to 1542. However, it did create supply on the way down, and since that time, you can see that we have hit that supply twice. So that usually once it starts to hit supply and comes back down, that's a lot of times when you have the stock market move back up again, because you lose that volatility and people get more complacent, and it's holding below. It still has another supply coming in at 5078 to 5262. And you can see it even more so here, where this demand on the 30-minute, we've came down and hit that demand, and then we still have a supply. It filled the gap pretty much, but it didn't quite come back to the supply. So that's kind of telling us that if prices move back up into this area, it would still be a buy on the equities. So if we are able to get back up here, it would still create a buy in equities once it gets back up to this close supply. And of course, that further supply too, if that were to happen, which will create a lot more volatility for it to get back up there. All right, so that's on the VIX. And you can see a lot of these markets are correlated at the moment. If you take a look at the, crude oil, Aussie, the stock market. Let's see where crude. Let's start with actually bigger picture here. All right, so you can see that, right? So ever since it came off the lows, a very explosive move off of the lows here. Not too surprising. Did form a little bit of an overnight area. So if you want to keep that in mind, this overnight area, you can see, which is right here, 33.43 to 34.20. Down below, you still have the 180 demand at 28.62 to 27.64. We did come back to a retested zone, but not quite up to the other overnights before the gaps right now. So just want to keep reminder of those, but they're both overnight at that 34.79 up to the 35.51, these two levels on top of each other. On the smaller time frame, you can see that you do have if you take a look, these are all going to be overnight. So in terms of high quality, because that's going to be mixed in with your 180 area. But if you want to break it down to a little bit smaller, you could take a look at this overall general zones as it comes back up there. But since equities are holding, you will have to pay attention to opposing demand right now. All right, so that's on crude. Let's move to gold. Ooh, gold already. Okay. Oh, we had some pretty decent move in gold. All right, so gold, we have, so the fresh demand is still coming in at this 1647, 1635. You can see where it's sitting at right in the middle here. Does become a little bit difficult right in the middle here because prices can, in terms of direction-wise, you don't really have a direction-wise. I kind of was looking at these areas, but it looks like it already came down to the demand side. The upper supplies, the overnights, we didn't get back to yet, so you could keep those in play with the, you can see the brown level, not, these two are overnight, right? So we went over this yesterday. Down below now, you also have also an overnight that's coming in, that's $16.99, $16.96. I think that's part of, let me just take a look, need a little bit more days. Yeah, that's part you can see where we have tested, we started move off of, and then we started to continue that move. So this is two areas where it's hit before, and then now this is an overnight that it hasn't been back to yet on the demand side. Let's take a look at two other metals as well. Okay, so we have platinum. So you can see this upper zone on silver. Let's do silver first. So silver here on the 240, that's coming in at the 1827 to 1849. So a little pop up above the high is going to take you up into that level. On the 30-minute, so this area you can see it looks like it just might have touched but barely missed. That's the only reason why I'm keeping it still up on the radar. It's not a high quality. Right? Yeah. So those of you that's a little bit asking about so this is what you want to do with it, right? So let's go to, well, let me finish with this and then we'll do what I thought. So anyway, this is this is one I'll keep on my charts. But I like the upper zone better just because it is going to be above the highs and it's going to be a fresh area. But this one, since prices have just barely came back to and touched, then I will still keep an eye out on this area. The lower demands, you can see, well, that one's quite low. We don't need to go through that today. Let's go into the 15. So what we have here right now is what did happen overnight. You can see this area came in once and tested, but since then we did have a pretty strong move out. So again, another one of those zones I would take a look at coming back in. And then of course the fresher one is now coming in closer to the 1693 to 1687. Okay. So those of you that's looking for the, you're looking at this and you're saying, well, I don't get it. My chart doesn't really look like that. So you first got to go and look at what the, basically what the pit session trading are for these markets, right? So when do they start? When do they close? I mean, they are, global markets, but they start and end at a certain time. So everyone is a little bit different. The bonds can be grouped together in one. The nat gas and crude oil, those energies can be grouped together in one. Once you get into the metals, it's a little bit, they can vary by about 10, 20 minutes. So some will open at 8, some will open at 8:10, some will, well, this is Eastern Standard Time. Some will open at 8:20. And then the closing times is going to vary between, all the different assets, right? When you just think of it in terms of when you're looking at an ES.D, NQ.D, they already have it kind of laid out for you. With this is I'm custom making it so that it's almost like a .D for myself, right? And as with anything else, just like you have to do with the futures, looking at the Globex session, you're going to have to do this too, right? You're going to have to see, even though, it looks fresh on here, doesn't necessarily mean that it hasn't gone through it in the overnight. So it's something that you still have to go and look at. Just don't, here, this is where it is, and let me trade it. You still have to do your little homework and look back on it. But you can custom make these inside a TradeStation. I have it up as like a side chart too, and you could do it for all of them. I have, for silver, for platinum, for gold, crude oil. And this just, all it does is it helps if you're having some kind of trouble, it can somewhat, all right, well, this is somewhat near supply, this is somewhat near demand, then now let me go and let me investigate it and see if this is an area that I like. So if you're looking at, a lot of times, because when you're new, you're looking at it and you're just looking at a chart with a whole bunch of candles. Now you're getting confused. Now all of a sudden you have these gaps that can help you to say, well, okay, here's some supply, here's some demand. Let me go and take a look at it. Let me see if I like it a little bit better. So, you can look into it and yeah, we could definitely go into a little bit more at a different time too as well. All right, let me go into all right, so on platinum, again, we do have a nice level above current price. That's coming in at the 960.56 to 978.20. You can see a nice pop-up above the high is going to take you right into that area. In terms of real fresh demand, it's still much lower at the 665 to the 652. Oh, we do have on the 60-minute. So you can see that just similar to silver, it does have an area that's above current price. So you can see that 931, 937. It's an overnight area, so I'm going to be careful with it, but I'm still going to keep it on my radar as prices get back in there. I'm going to watch that zone for possible supply. Down below, the fresh area is going to come in at the 1819 to the 812. This area we did retest one time, but I do like it for the fact that it is a nice little push below the low. So also it's another one that I'm going to keep an eye on, just like that one at 841 to 835. On the smaller time frame of what we had overnight, since we did have a very strong rally out of price, we do have a 5-minute area overnight zone that is coming in at 861.40 to 858.30. All right, so let's go now. Actually, I do want to do 2 more markets before. A couple of things we don't really look at, so let me take thought I'd bring it up. Okay. So here's a bigger look at corn. Should we push down lower? We're getting closer, but not quite there yet. You can see this monthly demand coming down at the 260 at 220. So it's a large area because it is a monthly. However, you can see once it gets down there, it will be significant. So you want to keep that on your radar should it get there. Yeah, and you can see, of course, in terms of fresh, that is way up above current price. But on the weekly, will be the 410 to 424. Now, once we get a little bit closer, we start to see. So up above, you do have the fresh area coming in at 365 to 371. This area was tested once, but you could see since that time, we barely had a chance to get back to it. So I will also be fine taking at the 344 to the 350. Now let's move down into, okay, let's move into, hello, corn. Where did you go? Okay, here we go. All right, so if we take a look what we have going on here on the daily, right above current price, you do have this 328 to 335. So inside of this, it's been a pretty large move down. With this one, I would have to say you have to pay attention to if you do have some new demand come right before it. But for right now, you can see above this high, you are going to have this daily supply that's right up above current price. On the 240, you can see that this area can work another time for you. We did start to bottom a little, created a little base, and then started to move out. And then with a gap, it did come back close to filling the gap. And now we are higher than that. So you can see that 307 to the 303. And then on the 15-minute, I would caution you to, any of these markets on the smaller time frame. A lot of times with the FX, with these commodities, they can work for you when we have some slower volatility. But anytime if you have some grain reports or you have, just some kind of news that about the productivity with the other nations and everything, and trade wars and stuff like that, the smaller time frame is not going to hold up for you that well. But when you have that small volatility coming in and you get a little trade in, they can still work for you fine. Just be careful if you have some high news coming in. So you can see that 321.28 to 322, a little 15-minute area of supply. Okay, so that's on corn. I thought I did. Maybe I didn't do soybeans. Okay, next time then. No, I didn't do soybeans. All right, next time. Let's move to the dollar. For those of you, when you're looking at your indexes and you're saying how the strengths, don't forget our page here, right? Don't forget our, when you take a look at these and you have different sectors here, right? You have your materials, you have your energy, you have your financials, you have your industrials, you have your technology, your consumer staples, your utilities, your healthcare, your consumer discretionary, your, well, at the bottom I put semiconductor, but, you're looking at the Dow, you're looking at the small caps and the S&P 500 because there's 500, right? Dow has 30, small caps, that's another. And then of course, technology. So when you take a look at any given day, sure, when you have a very bullish day, a very bearish day, these are all going to be red. These are all going to be green. But when you have a mixed day, right? People are, okay, maybe we have airline stocks that are bad today, or we have financials that are bad today, or we have healthcare that's good today. It's going to affect what these, and I went over in one of my sessions where which stocks are most significant for which index. So when those big, you can just see when the FANGs have issues, it's going to affect the, NASDAQ, going to affect technology. So those things, if you're looking at comparing relative strength and weakness within, the Dow, the Russell, NASDAQ, and the S&P, this is where it's coming from because, people shift, from whether they're positioning different for the month or they're, trying to trade for the day, or, there's all different type of investors and traders going on. So you're going to see these markets shift. And according a lot of times with the news too, they're going to shift out of sectors, right? When you have energy shifting in and out. So that's where you're going to get into, sometimes one gets stronger, sometimes one gets weaker. Just like when we brought up the Nikkei, saying that that's going to be a market that's going to affect other things, and it did overnight. It affected it, from the start of yesterday and going into today, and same thing with this. So it's it's a thing you should pay attention to if you looking at that. So here's the dollar. And don't forget, really, dollar has gone absolutely nowhere, right? I mean, if you want to say middle of a range, middle of the range, and it's to be expected with the dollar. It's just the market, especially lately. If you don't have great volatility in the stock market, it just seems to go inside of a very quiet range, and so it looks like big moves, but really, it hasn't gone anywhere. So what we've had so far is that we did have a 240 zone. It came down and dropped to. It came back into our demand zone here on the dollar. So we were able to get in a short on the euro because of that. And then you can see the new area. So that's going to be, that you just got to realize as we start to get into these areas, they're going to be more and more compressed inside of that range. So that meaning lower and lower quality, because the more we stay in this range, the less and less there's going to be a supply and demand imbalance. So now, the more you try eventually. So it's going to be the same with your, euro and all. The more you try within the range, eventually, these areas are going to not really work for you because it's not going to be a great imbalance, lower probability areas. So now you can see as it comes back up, this area 99, 97, 108, and then down below at 99.23 to 99.14. Okay. So for the euro, we did have a nice move down into demand, a decent bounce off of it. So as it hits up there, you could see the dollar was coming into that area of demand, and then took us all the way down into this opposing. But you can see on the opposing, we did have a couple of supply levels in its way. Did almost get back up to the third area, but it is hard once you do have a couple in the way in terms of, it did pretty well in terms of getting through two of them, but then couldn't get through the third one. Now you can see above current price, what we do have is the 109.26 to the 109.36, and then above on the 30 also at the 109.84 to the 109.98. Down below, you have some more demand coming in at the 108.64, 108.54. And like I said, all of these are inside of that dollar range. So you do have to pay attention to profit margin on any of them coming back to it. 240, you can see that this 109.50, 109.66 after prices couldn't get above this pivot area, started to fall back and took out some demand. Let's move to so on CD, very much also in a range from the 240 demand to the 60 supply. So you can see in the middle here, it did have some trouble trying, to hold too much. It did attempt a little bit, but still having trouble in general. Now you can see it has some supply. But again, this is going to be the same thing as the euro. We're getting tighter and tighter inside of this range, and your middle areas are going to be tough. So just a warning out there for those of you trying to trade this middle area. So that's 71.51 to 71.53, and then 71.59 to 71.63. Okay, let's move to the Swiss franc. So on the Swiss franc, another market it's the same theme all the way around. So, you can see, you could do some day trading in these, but beyond that, you're not having terrific direction. So we did come back to our 240 zone in the middle of this range. For those of you that, I don't know if anybody was able to capture that on the Swiss franc, that came back up to the 103.75 to the 103.98. And you can see right now we've fallen all the way back down now. And in terms of the next demand on the daily, you can see this area looks pretty decent. It's right below that gap that's coming in at the 101.33 to the 100.93. And then you also now have so this is, again, very, very middle of the range, even middle of the range. And that's coming in at the 103.30 to the 103.40. Kiwi. So Kiwi on the daily, you can see it is starting to struggle up here. So anything inside of here is also going to be in the middle, right? If you want the fresh areas, you're going to have to wait for prices to get out of these overall. But for right now, you do have a little bit of this middle of the zone demand, which is the 60.44, 60.26. Otherwise, you can see the fresher areas coming in at 57.19 to 58.44. On the 30-minute, you can see right below that, you do have the 60.15, 60.06. So that can be an interesting area to watch, a little trap below that 240 to come into this zone. I believe that looks like it's pretty decent. And where is the... and we have some supply above current price. That's coming in at 62.29 to 62.43. And then the upper one, two levels on top of each other at 62.80 to 63.18. And then the other market I want to go over. So the pounds, unfortunately, the pound, very similar to the other markets, hanging below this 240. So really, once you needed to get out to some of these newer, fresher areas, and you can see on the 240 where it is above and below current price with it. So if you want to trade in the middle, I'll give you some levels, but just realize that we are in the middle, and it's just nothing we can do with these FX markets. That's what it's offering to us at the moment. So you either hang tight and wait, or if you want to take these because it's low risk, then take these because it's low risk. So up above on the 15-minute, you have the 122.04 to 122.11. And then on the 5-minute, also looks interesting right above that area at the 122.25 to the 122.31. And I think there's also, maybe not. I thought, yeah, I think there is. I thought there was. It looked like there is. Maybe I don't have enough days back. It does look like there's a little demand there at 121.54, 121.46. All right. So it has been a great week with all of you. And for those of you that's going to be with us next week, For those of you that's going to be with us next week, okay. So for those of you that's going to be with us next week, you can see that we cover a lot of futures today, but it will get into more of options, stocks, and all the other markets too. And yeah, it's been really great, and I hope to see you all. And for those of you who need the website, there you go. All right. I will see you.